everybody. Welcome to our very first ever live episode of Taking Stock. Wow, this is exciting stuff, and waiting for you guys to join the live stream. But I'm really excited. Okay, people are coming on. I see 9 of you on now. Awesome. All right. So it's our very first live episode of Taking Stock, and also the very first time that I'm using our brand new studio. It's not much to look at right now. You're not really seeing anything. Let me give you a little tour before we start. So we've moved into our new studio space. This is really behind the scenes stuff, right? And it's really empty. So here we have office desk. Literally just moved these in today. And makeshift sound blanket. Here's our lights, microphone. Here's the setup. Yeah, this is what we're looking like right now. The beginnings of KRM Studios. So you get your exclusive first look right here on Taking Stock. How exciting is that? So we have a lot in store for you today. As usual, we have a full show. So let me give you a little preview of what's coming up on this episode of Taking Stock. So first of all, July 1 marked the change to St. Lucia's International Business Company, the IBC Act, which had allowed non-resident organizations to benefit from very low taxes. And then globally, the world's most powerful companies, the G7, are calling for a global minimum business tax. So joining me a little bit later on to discuss, we'll have Vice President and Head of Tax Advisory at Sygnus Group, Denzil Whyte. And then the analysts will be weighing in on the latest market developments because there's a shortage of cement, leaving retailers struggling to meet demands. And then speaking of cement, well, Carib Cement's results are out. So we'll find out from the analysts how they did. And then internationally, Robinhoood surged 50% in trading last week. I wonder why. Well, we're going to find out from the analysts. So I didn't even tell you, I'm Kalila Reynolds, and welcome to Taking Stock. Of course, we're bringing you all the latest business news and telling you how it will affect you and your money. But as usual, before we get started, head over to my website, KalilaReynolds.com/newsletter to get my newsletter straight to your inbox twice a week. And you can click the link. I think it's in the description box below, but if it's not, then KalilaReynolds.com/newsletter is where you subscribe to that. Now, come on, let's get this money.
Here's what's hot, brought to you by Jamaica Money Market Brokers, your best interest at heart. Barita Investments shareholders have approved an additional public offer of at least 160 million new ordinary shares. The approval was given at the company's extraordinary general meeting last Tuesday. Directors can upsize the offer by a further 80 million shares in the event the invitation is oversubscribed. New shares are intended to raise capital for the benefit of the company. The public will be invited to buy the new shares. The other terms and conditions of the offer will now be decided. This APO will be Barita's second in about a year. The company raised $13.5 billion in an APO last September. At current market value, the new shares would be worth about 13.4 billion Jamaican dollars, or about 87 million US dollars. Jamaica's reserves are set to be boosted by more than 500 million US dollars in the next few weeks. IMF member states have approved a 650 billion US dollar fund to help countries deal with mounting debt and the impact of the pandemic. It's the biggest resource injection in IMF history. Finance Minister Dr. Nigel Clark says the development has come at a critical time. About 275 billion US will go to emerging markets and developing countries. The allocation will be effective on August 23 and will be credited to IMF member countries in proportion to their quotas in the fund. The exclusive cashback platform in the Caribbean has partnered with WePay to bring cashback offers to the region and drive more paying customers to local businesses. WePay CEO Aldwin Wayne said that the company is pleased to extend the American cashback network to the Caribbean. Wayne explained that if a Caribbean business uses WePay and someone from the U.S. uses a card issued by a U.S. bank with cashback features enabled, they will be able to get cashback as a reward from spending at that location. Under the partnership, Cash will launch cashback offers to over 50 million U.S. travelers to the Caribbean, and WePay merchants will have their businesses and offers advertised to a massive new audience. The NCB Financial Group is expected to launch a mobile wallet solution, Link, this year. The company said that the aim is to disrupt the financial services landscape for the good of its customers. Speaking at the company's recent investor briefing, CEO Patrick Hilton said a subsidiary has been created to launch the mobile wallet. Hilton said it will allow customers to send and receive money to make payments at merchants and other stores. The announcement for Link comes on the heels of the start of the pilot of Bank of Jamaica's digital currency, CBDC. NCB Jamaica will be the first financial institution to test the new system. Meanwhile, over in Belize, the Belize Bank has launched eCash, the first digital mobile wallet in the country. The solution was fueled by the COVID-19 pandemic, which has made social distancing a public health necessity. The new payment method does not require citizens to be customers of Belize Bank or any other financial institution. The wallet uses smartphones, telephone numbers, and 4G data. Users will simply need to visit designated eCash retail operators and top up their credit. The user can then make purchases and payments or send and receive money from another eCash user. The Belizean government is now in talks with Belize Bank and the National Bank to integrate these kinds of digital wallets in the public service. Fathers at the National Commercial Bank NCB can now access paternity leave upon birth or adoption of their child. The company made the announcement last week, noting that the initiative is aimed at helping to improve the overall employee and organizational health. The policy caters to fathers married or who have been in recognized common law unions for at least 6 months. Employees can take advantage of paternity leave up to 3 times per year for births, adoptions, and stillbirths. General Manager for the Group Human Resources and Facilities Division at NCB, Uton Cummings, said allowing fathers access to paternity leave will help them invest in their family lives. He added that the policy will open the door for the creation of better parenting relationships, father-child bonding, and postpartum support for mothers. Grace Kennedy GK has completed its acquisition of Scotia Insurance Eastern Caribbean. It says the company is to be rebranded under the name Grace Kennedy Life Insurance Eastern Caribbean Limited, GK Life. GK Life will continue to offer credit protection on personal loans, residential mortgages, personal lines of credit, personal and small business credit cards across the 7 Eastern Caribbean countries where the company previously operated. Group CEO of Grace Kennedy, Don Webby, said GK Life will strengthen the group's position as one of the leading financial groups in the Caribbean. Customers who held policies with Scotia Insurance Eastern Caribbean will see no changes to their policies or premiums by GK Life. What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart.
So that was What's Hot, a lot going on in business all over the region. And I know a lot of you are probably thinking, okay, what about the digital Jamaican currency? $230 million minted just yesterday. We're going to be having an exclusive interview or 2 exclusive interviews about that next week on Taking Stock. So that's something that you definitely want to stay tuned for. But this week we're talking about tax law. So there's a lot of changes that have happened in the region and some that are proposed as well. Publicly listed IBCs, international business corporations that are listed on the Jamaica Stock Exchange that currently benefit from St. Lucia's low tax incentives include Mayberry Jamaican Equities, we have Sygnus Credit Investments, Sterling Investments, and Proven Investments, to name a few. So how will these changes affect them? Because the changes came into effect on July 1. Will they now have to pay 30% income tax? Well, just before I introduce my guest, let me welcome everybody who's joining us for the live stream. Really happy to have you on. And remember that you can comment in the comment section on the live chat. If you have a question for our guest, I can also take your question. So just comment away, share away. Let me know what's on your mind in this segment and the analyst segment as well. Well, my guest today is Denzil Whyte. He is the Vice President and Head of Tax Advisory at Sygnus. Welcome to Taking Stock Live, Denzil.
Good evening, Kalila. Good evening to your viewers. Happy to be here.
I'm so excited to have you for this very first live episode. We're trying a thing.
All right, I'm with you. I'm with you.
And so far, so good. I should also say that this segment of Taking Stock is brought to you by Bulwark Insurance Agency, insurance made easy. So, Denzil, first of all, tell me, what is an international business corporation, an IBC?
Okay. To a certain extent, you probably should be saying what was an IBC, but let me just
Ah,
go ahead. So yes, you're right. It's an international business corporation. Um, in the past, IBCs, particularly in St. Lucia and Barbados, were a feature of tax planning for persons who had investments in the Caribbean. It afforded them so many tax efficiencies through the CARICOM double taxation treaty, as well as other features in relation to low information requests and low taxation, low income tax, low withholding tax, low transfer tax, and the avoidance of double taxation. So companies had IBCs as a favored destination to actually route their asset holding companies in.
Okay, understood. And so, how much of a tax benefit have these companies gotten? So, what percentages are we looking at?
Okay, well, what they used to get, and I say used to because there are no more IBCs for Barbados, and even though IBCs remain in St. Lucia, they are basically going to have been taxed as regular business companies in St. Lucia now. So what they used to benefit from in St. Lucia, you had the option of selecting either 0% or 1%, yes, 0 or 1% on your net income as an IBC, and that obtained up to June 30th of 2021. And in Barbados, you had 2.5% as the tax rate that applied up to June 30, 2021. That has changed now, of course, because in Barbados, where there are no more IBCs, instead of the 2.5%, the former IBCs are now able they now have the same tax rate that applies to a regular business company in Barbados, which would range from 1% to 5.5%, depending on your level of income. And in St. Lucia, the tax rate is now 30% on St. Lucian source income.
So tell me, why has this change been made? Is it that CARICOM governments were complaining about it, that businesses were getting away with not paying taxes?
Well, I wouldn't say it originated with the CARICOM countries. It really originated with the OECD, because the OECD has for some time been raising issues in relation to BEPS, base erosion and profit shifting. So they saw it as a danger or a threat to higher tax jurisdiction countries, when companies that wanted to get these benefits would shift their profits from those higher tax jurisdictions to the low tax jurisdictions, and it took away from the base of those other countries, and basically affected the country's ability to meet their financial obligations, even in this time of COVID, when most countries are seeking to ensure that they can deploy resources for healthcare. And what OECD did was to actually blacklist both Barbados and St. Lucia in 2017.
Oh, that's what happened.
Yes, and
That's what
when
happened.
they are blacklisted, a lot of countries and companies won't want to do business with them, and I guess that's what prompted them to move, and they moved pretty swiftly, because by 2018, both St. Lucia and Barbados actually came up with something that caused them to be with a plan that was accepted by OECD, so much so that they were removed from the blacklist.
Ah, I see. So, well, it sounds quite similar to the reasons behind this push for now a minimum global business tax. So, are there similarities there?
Absolutely, Kalila. So, the OECD, again, through an inclusive framework in collaboration with the G20, actually are looking to go even beyond just this matter of blacklisting, but trying to, through the inclusive framework, get all the member states to sign on to remove the low tax jurisdiction in the first place. But they go beyond that. They have gone beyond that to actually seek to have the basis for taxation not only being your residency, because typically a country, most countries, one of the pillars of their taxation regime is to tax their residents. And if an entity simply moved its residents from that country to another country, that would cause them to come outside of the scope of the tax jurisdiction within the country that they want to avoid. So the inclusive framework is not only seeking to to have a minimum tax applied by the countries that sign on, they're also seeking to have the tax basis moving from your tax residency to actually the tax market, the market that you're selling your products in. So if a big company like Google seeks to move its tax residency from the consumer market that it's selling most of its goods, this will actually address that, because the market that it is actually selling in will get a claim to its taxes and the taxes on its income on that basis, rather than on the basis of income, of residency rather.
Okay, I see people in the live chat saying this is a good explanation. JCJM says, this is, I'm actually following. Good job, Mr. White. So you're doing a good job of explaining it, and I'm pleased. Yeah. So, all right. So there are several Jamaican companies who are listed, who are registered in St. Lucia. And I know that some of them at least have come out and said that they are, and Sygnus is one of them too, have said that they are looking at how this is likely to affect them. And I'm sure that for some of them, there may be different ways in which they are affected. So I'm going to ask you to speak as generally as you can to say what's likely to happen here. Is it that these Jamaican companies are now going to have to pay the full 30% corporate income tax?
Okay, so the 30% only applies to St. Lucia and to St. Lucia source income. So if the IBC in St. Lucia is making most of its income from another jurisdiction, then that 30% tax rate will not apply to that IBC in St. Lucia. But there are some other things that might apply. Whereas previously, most of the payments made by that IBC would have been without withholding tax. You're going to have withholding tax since July 1, 2021. So the directors of those IBCs who used to get directors' fees without any withholding tax, not being residents of St. Lucia, they will actually be faced with a 25% withholding tax on such payments. And that is not about the income in that country with the 30%, but they might not have recognized that they will have that 25% withholding tax. If that IBC is paying out management fees, it's going to have 25% withholding tax. If that IBC is, well, dividend is something that will still remain at zero coming out of the IBC. But I know a lot of the directors never realize that they will actually be faced with tax on their directors' fees that really is subject to tax in the country that is making the payment based on the CARICOM double taxation treaty.
So this is going to
Also,
affect the directors more so than the actual company. So the directors on a personal level will have to pay these taxes.
well, it's interesting that you say that, Kalila, because some of these directors may actually have sway within the company to say that their directors' fees should remain net of tax, which would mean if the directors don't bear the tax, the companies will have to bear the tax for the directors. Yeah. And whereas before those companies would have had, well, let me not say before, there are restrictions in relation to the deduction of management fees in management fee expense in St. Lucia. No restricted to 1/10 of the other expenses. No, that wasn't an issue, wasn't a major issue when the tax rate was low, but when the tax rate is higher, you can see that it would result in a higher base for tax to be applied on. In Barbados, for example, because we have been talking about St. Lucia a lot, there's no deduction going forward in relation to management fee expense to connected parties, and that will increase the tax base in Barbados. A beauty about the Barbados regime is not only that their tax rate, the highest rate now, is 5.5%, but also that they actually have no withholding tax. So the regular business company in Barbados now has no withholding tax on payments to non-residents. And another beauty of Barbados over St. Lucia is that Barbados have so many double taxation treaties with other countries. So if your CARICOM entity is just a special purpose vehicle between your ultimate beneficial owner and the Jamaican assets that you might be investing in, whether shares or otherwise, you'll find Barbados pretty useful, because with St. Lucia doesn't really have any double taxation treaty with others. So when you're pushing the money through the CARICOM entity up to somewhere else, for example, you'll find some utilities going through Barbados. So there are still lots of benefits to
So if I'm
juggle.
looking to incorporate a company now, should I be looking at Barbados?
Kalila, I'd have to have a talk with you to find out what the income stream would be like,
Right.
what the expenses are like, what your objectives are,
Right.
which countries you plan to ultimately route the income to, where your partners are would be important.
Right.
Because if your partners are in China versus US versus Spain, then I'll be telling you something different.
Yeah. So IBC,
really
I actually
depends.
looked into this. I looked into this last year because I was like, okay, all these big name companies are incorporated in St. Lucia as IBC. Well, I want to incorporate KRM as IBC too and take advantage of the same benefits. But for a company my size, it didn't make sense. Added to that the laws were already changing. So they had the grandfathered clause so that the Provens and the Sygnus would still benefit up to a point. But for me, it was a little bit too late. But then in addition to that, there are the fees associated with maintaining an office in St. Lucia, which wouldn't make sense for a company my size. So I imagine it would be the same thing in Barbados. So if you're under a certain revenue threshold, it probably doesn't make sense to go try and incorporate there, huh?
Absolutely, you're spot on, because there are economic substance requirements that may require you to have your records in the country, your meetings in the country, adequate employees, adequate expenses, adequate resources, and all of that has ongoing administrative costs that you have to weigh against the potential benefit. So you're always going to be required to look at the cost benefit analysis. Look at the savings, yes, on one hand, but you have to compare it with the cost and see if it's worth it. Not only the economic cost, but the administrative cost as well, when we're talking about economic substance requirements.
Right. So, but how does that work now with being legally required to have your meetings in the country when most meetings are taking place online these days?
So you want to have a situation where ultimately the person who convenes the meeting is in country, and adequate number of the persons attending the meeting are in country, or certainly not in any other country that might want to claim your residency at the time of the meeting. And ultimately, mind and management, the location of mind and management is important, still important to determining where you're a resident, but your residency requirement still is different from the economic substance requirements.
Somebody's asking about Cayman. What about Cayman?
Cayman is currently a no tax, no income tax jurisdiction. I don't remember right now, but it would be important to check if they are part of the inclusive, the OECD G20 inclusive framework, to see if they signed on to the minimum tax. They might have, which means that things might change in the future.
Right. So speaking of that, what's your view on this proposal? And we mentioned it before, by the G7 to have a minimum global tax to shell companies overseas. Does it seem like that's actually likely to happen, given that it's the G7 that's pushing it?
It's not really the G7 that's pushing it, you know. It's actually G20 and OECD, which takes it to over 300 countries worldwide.
So that sounds big.
Yes, it is big, and quite a lot of countries have already signed on to it. We are expecting or promised to have more information about the fine details by next year, and possible implementation within 3 years' time. So it's not so far off, actually. And so that is in relation to the scale of it and how likely it is to happen. And there's always strength in numbers. Once you come together, you know, you're going to put pressure on those who stay away, you know. And so that's from the perspective of the likelihood of it happening. As to my own thoughts on it, I would want to reserve it somewhat until the details are out, and the devil is always in the details. So I don't want to reserve it. But just to say, though, that the likely winners in that, and let the audience be the judge of it, the likely winners would be the countries that don't have the big corporation, the big multinational companies resident there, but actually have the multinationals supplying to persons within their market. So the big consumer markets will benefit more than the smaller nations. And in relation to who will suffer the most as organizations, it's really the real large multinationals that will suffer the most in terms of, and that's because they are the ones being targeted.
So like which companies?
They are seen as
watching Denzil right now. A lot of people watching right now are invested in companies, not just in Jamaica, but in US markets and European markets as well. So like which companies are likely to be affected by this? You're looking at, say, Amazon and Apple and them companies there?
Google comes to mind as well, in addition to those you mentioned. And we're talking about companies that have revenues in excess of 20 billion euros, right? So we're talking about real large companies. And it's important to mention that in relation to the inclusive framework, it's only profits in excess of 10% of revenue that will come within the scope of the proposed measures. If your profits are not over the threshold that I just mentioned, and at a rate of greater than 10%, it will not come within scope. So the target, it would really be very large companies, and with a bid to try to move their income to the jurisdictions that the consumers are actually located, rather than where they're residents.
So there'll be no escaping it. Thank you so much, Denzil. And let me just read this last comment. Explanation is so on point, but I still believe having a tax advisor on your side would be such an asset for a company. Mr. Whyte, does your company help small companies in this regard?
Absolutely, absolutely. That's what we do. Absolutely, that's what we do. Give us a call. We want to partner with you. We want to, as I told Kalila just now, want to hear about your story, hear about what you want to accomplish, and actually sit down and create a plan to try to ensure that you benefit from all that is out there available for you that fits your own style and your own imperatives.
All right. Thanks again, Denzil. Really appreciate the explanation that you've given. A lot of people, I think me for sure, I have a lot more clarity on what this is going to mean when some of these, because it looks very likely, especially for the minimum global tax, when it actually comes into effect. So I really appreciate that. Thank you again.
Thank you so much, Kalila. A big fan here. Nice to be with you. Take care.
Awesome. Thank you. So I'm really happy to have all of you on and join the live chat. So remember, the analysts will be coming up very soon. So put your comments in the live chat for the analysts. 99 people joining us live. Tell me, what you guys thinking about this live format? It kind of came about by necessity because, let me be honest, how this happened. So last week, I took the vaccine. Half of my team took the vaccine, and we all had some serious side effects from the vaccine. I'm not saying that you shouldn't take it. You absolutely should. It really is, worth it to take the vaccine so that our society can get back to normal much faster. But that's a whole nother conversation. That's the reason we were unable to pre-record last week. And so we decided we have the capability to go live. So let's try out this new live show. So tell me what you are thinking about this live format. Is something that we should do more often? If you want to participate in the actual filming of the show, let me know in the comments, yeah? But first, here's your market recap.
For your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange declined, with the combined index losing less than 1%. 106 stocks traded across both the main and junior markets of the JSE for the week ending Friday, August 5, 2021. 34 advanced, 56 declined, and 16 stayed the same. 44 million shares changed hands on the Jamaican dollar market, totaling nearly $289 million. Lumber Depot traded the most, taking up 24% of market volume. The stock lost 34 cents to open the week at $3.03. Fesco traded the second highest, with people buying and selling 4 million shares in the company. The stock gained 11 cents to open at $1.56. And the Trans-Jamaican Highway rounded out the most traded, taking up nearly 9% of market volume. The stock remained unchanged to open this week at $1.25. Now let's see who had the biggest gains. CAC 2009.5% cumulative redeemable preference shares stock price rose 20% to close last week at $1.20. JMMB Group 7.25% gained 35 cents to open this week at $2.67. Rounding out our biggest gains, 138 Student Living Jamaica, which gained 49 cents to open this week at $4.99. On the losing side now, KLE Group was the biggest loser for the week, down 14%. The stock closed last week at $1.07. Siboney Group was second on the list, its stock price down 14% this week. The stock opens this new week at 42 cents. Rounding off the biggest losers, JMMB Group 5.5% FRUSD CR preference shares, which lost 13% to close last week at $2. Market recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
All right, so time now for the analysts. We have the analyst montage. No, I don't think we have it up. Well, that's okay. We do have it. No, we don't have the analyst montage. Okay. That's what happens in live. This is the first time we're trying it. You know, we're gonna have some kinks and bumps, but I think it's been pretty good so far. So it's time now for the analyst, and this segment of Taking Stock is brought to you by Jamaica Money Market Brokers, JMMB. So you see Greg Linda here joining us from JMMB Group. We also have with us Keisha Bailey. She is from Profits Jumpstarter, founder and CEO. She's also a financial coach. And last but not least, business writer at The Observer, the famous David Rose. Welcome to the show, everybody.
Hi, thanks for having
us.
All right, good. So let's get right into it. Let me see. What are we talking about first? Cement. I hear there is a cement shortage. David, what's going on there?
Thanks for having me on, Kalila. So what we're seeing right now is that because there's such an explosive demand locally for cement for all this construction, what you're seeing right now is a disproportionate issue regarding supply in certain markets of the country. So on the western end of the island, which encompass like your St. James, your Ocho Rios, and so on, they're saying, hey, we're not getting enough cement to do our business. You know, we have timelines and things to finish, and we don't have enough cement to really keep up. And Carib Cement, I see that, hey, it was a logistics issue, but that doesn't matter. They have things to do. And other company that is allowed to import cement, in this case, Buy Now Cement Limited, has a quota of 120,000 tons of cement per year. So when they're finishing cement for the month, that's just it. They can't put any more until the next month starts. So what you're seeing right now is that Carib Cement is struggling to keep with the domestic market, which is a great thing, because a decade or so ago, the demand wasn't as strong for construction in Jamaica, much less even to the point where you're seeing Carib Cement hit new record highs in production. So in March alone, they hit 100,000 metric tons of cement production alone. And what happened right now is that Carib Cement is actually going to embark on a $30 million or 4.6 billion Jamaican dollar expansion project, in the sense that they're going to upgrade the capacity of the Rockport plant by 30%. So they're making about 1 million metric tons per year. They're planning to.
So David, if they're making all this additional cement, they're producing more. It is the demand side then? It's just that the demand has been so great that they can't keep up with it. I remember a couple of weeks ago, Keisha, when you were on, we're talking about this construction boom and all these new projects.
Yes.
So Keisha, what are you seeing? Is it just that the demand is too great that they can't keep up even with increased production?
Yeah, so we spoke about over 90 new developments coming on across the island. That is a record high. And so because of that, demand is very strong. As David mentioned, there are lots of logistics issues, but these have been age-old problems with Carib Cement, and they continue to persist. Demand, however, is strong. Don't see it abating anytime soon. So should be interesting to see how this plays out.
So Carib Cement just posted their results as well, David. What are the results looking at? How is this playing out in the numbers for Carib?
Well, Carib is having the time of their life, if I like to call it.
I'm sure.
Because, for context, Carib Cement did $3.2 billion in net profit last year, for all of 2020, right? Including COVID and everything. They had $3.09 billion in net profit just for the 9 months. And for last year, they did $20.1 billion in sales in terms of revenue. In the 6 months overall, they've done $12.5 billion in revenue overall as well, relative to $9.6 billion last year. So you're really seeing the demand play out in the numbers. And Carib Cement has basically taken that money to really free themselves up. So some background history for those who didn't know. So Carib Cement went through a very difficult time between 2009 and 2013, where issues with the cement at the time, quality and so on, saw a steep decline in terms of demand and so on. So what you saw is Carib Cement taking years and years of losses, to the point where within 2013 they recorded a $3.35 billion loss. As a result, they incurred a large debt load, which at the end of 2018 was $11.4 billion. So what you end up seeing now is that because they're making so much more in terms of profits and in turn cash flow, they're paying down their debt very aggressively. So they owe 3.1.
This what we're looking at here. I'm just sharing my screen. I just went on JSE website to see what the stock price is looking like. So they're trading now at about $95, 94.87 is what they would have closed at today. Let's see what it looked like 6 months. Ooh, nice increase over the past 6 months. Year to date, so year to date would be similar, and over the past year, a nice increase. So this time last year, $43. Now we're at 95. So just about double, 100% increase in the stock price over the past year. So that's looking. What's the projection, Keisha? You think for Carib Cement? Do you think they're likely to continue? People are going to continue snapping that up?
Absolutely, including myself. Carib Cement is doing extremely well because of the demand, as we mentioned. They're also very good at cost control. When we think about the main drivers of stock prices being earnings coming from higher revenue, Carib Cement is a tick on both, and their cost control is excellent. I see them going much higher. I love this company. I think they're doing a great job. Outside of their logistics issues, which they'll have to work on separately, they're really poised for continued growth. Really love them.
Okay, so let's look at another local company before we move overseas, because I really want to bring Greg in here. So Greg, we're looking at Grace Kennedy. They've completed the acquisition of Scotia Insurance Eastern Caribbean Limited. Tell me what that is going to mean for the bottom line at Grace.
Well, it should be positive. We don't have the full economic details of the transaction, but on one side, you have a North American-owned company that's looking to reduce their footprint in the region, and then we have a regional conglomerate like Grace expanding their wings and acquiring this business from them. It gives Grace a presence in the Eastern, or increased presence in the Eastern Caribbean. It may not be much or significant in terms of potential clientele. I mean, if you look at the total population of all those countries that Scotia Eastern Caribbean operates in, it's about 650,000 people. So that's a little over half the population of Kingston. But the GDP per capita for those countries are very high. In some cases, they're all 5 times what Jamaica's GDP per capita is. So there's depth of market. There's potential for them to actually offer products and services to increase their revenue base and bottom line. In terms of insurance, it's not the biggest contributor. It's I think food and money services will continue to be the main drivers of Grace overall top line and profitability. But increasing exposure to insurance diversifies away from some of those business lines, and diversity is always good. I mean, it still carries a certain amount of risk. We know the Eastern Caribbean is prone to hurricanes, and that's not necessarily a good thing when it comes to insurance. But nonetheless, it's still a move in the right direction for Grace. And, we kind of see the platform for insurance growing with Canopy Insurance, GK Insurance, which is already an established name in Jamaica. And now they actually have a conduit to offer some of those products and services in a wider Caribbean. So, all being said, Grace is a well-managed company. I'm sure they'll make it work, and I'm pretty sure they got a good deal on it. So, I look positively at how that will come out for Grace at the end of the day.
Yeah, absolutely. Grace is going hard with that new M&A division, no, the mergers and acquisitions division.
Yeah.
Just another
Yeah.
example of it. So we have some comments regarding Carib Cement. I'm not sure which of you wants to take this. So Lovell is saying, with this record high from Carib Cement, isn't it time now that the company starts paying a dividend?
I
Not
can
necessarily a question for analysts. This is a question for management, but
I can see.
perhaps you have an opinion on it. Who said you
Well,
can take it, David?
yeah, so for
Okay.
context, the Carib Cement last paid dividend back in 2005, and the reason I don't necessarily pay a dividend now is for two key reasons. For one, it was a large long-term debt, which is just down to 500 million now, and the preference share debt owed to TCL, their parent intermediate parent company, and I said TCL, I mean Trinidad Cement Limited. So the about $2.44 billion where the preference shares are still outstanding. And the thing is, if so, let us say Cashman pays a $1 Jamaican dollar dividend, right? They would have to pay a preference share dividend at the same or equal rate. No, sorry, at an equal or greater rate in US dollar terms to TCL. So Carib Cement can just say, oh, we're going to pay a dividend. No, it's going to incur a liability to pay TCL that US preferential dividend. So right now, the prior GM, General Manager, Peter Dunker-Sloot, said in 2019, before COVID, that based on the projections of how the company performing, that by 2023, they should have paid off the long-term debt, preference shares, and consider a dividend. Right now, based on how they have been paying on it aggressively relative to the rate of sales, probably by the end of this year, the debt will be long term to be fully paid down, and on top of that, you'll have no more preferential debt. But remember, they're going to undertake a US $30 million expansion project right now for Rockford. So we're not sure as yet how it's going to potentially affect the dividend, but really and truly, TCL is going to want some money because TCL Carib is the best performing subsidiary under Trinidad Cement Limited. That gives a context of how great Carib Cement is.
Yeah, yeah. So let's
Mhm.
turn to some international news now. Robinhood came to global attention with the whole, what do you call it? Our Wall Street bets, Reddit,
Meme
all that
stocks.
drama.
Reddit, yeah.
Yeah.
Meme
And the whole
stocks.
GameStop
Yeah.
situation, a few months ago, and they listed on the stock exchange. Which one was it? The NYSE
NASDAQ.
over the summer. The Nasdaq. They listed on the Nasdaq over the summer. What last month was it?
It was
Last
last
week.
about 2 weeks ago.
2
Yeah.
weeks ago, and they're already up 50%, Keisha. So tell me about Robinhood stock.
So Robinhood, which trades by the ticker, and no joke, guys, it trades by the ticker HOOD. That's the ticker it's listed under. It's at your
Jamaican life.
Yeah,
yeah.
that's
So
that's that's
as
a
I'm
joke for
referring to
Jamaicans.
it,
That's a joke for Jamaicans. Non-Jamaicans don't get
yeah.
that joke.
So
You could have done our
it's
hood.
trading fairly volatile so far. It came out at $38, went as high as $85 in the first week, after falling to 33 within the first day on the market. And it's your classic meme stock, meaning that Robinhood is being driven by what's happening on social media, particularly the Reddit website. You have a lot of persons there talking and giving stock ideas. And they're saying, well, it's time now to buy into Robinhood because Robinhood is your flagship company of retail investors trying to stick it to the institutional investors. And what's happening, because the stock, when it was listed the first day, the price fell, a lot of institutional investors ran in to start shorting the stock. The retail investors decided, well, we don't want Robinhood going down. This is our company. And so they started aggressively buying shares in Robinhood. That created what you call a short squeeze. And so because of that, the price had to keep going higher because the institutional investors were forced to start closing out their short positions. That created a quick run up in the price. So a lot of people benefited, double, triple their money. But the price has fallen back to about $53 as at close today. So exciting things happening with Robinhood. They're also making their first purchase 2 weeks after IPOing. They're
The
buying
first purchase, what
a
are they
technology
buying?
company for 100. Yes. A technology company for 140 million that came out after market close today.
How much was
The
their
intention is
IPO?
that they're going
How
to
much did they
buy this.
raise from their IPO?
It was mainly for persons to buy out the initial angel investors, but this was the first IPO of its type to have retail investors as well. So it was oversubscribed. I'm unsure on the specific amount, but it was massively oversubscribed, which is why everyone was upset that it fell within the first day.
So a note where the trading on it you mentioned was halted due to that volatility. So is that the Nasdaq's version of the circuit breaker that we have here in Jamaica?
Exactly. Once you have a massive change in the stock price in a short period of time, it flips that circuit breaker for sure.
Laughing at these
So
comments.
with the acquisition that they're
Good old sugars. You see his comments?
If we take it back to the financial fundamentals, still a good company though. They're making their acquisition for a technology company that crowdsources in retail investor sentiment for the company meetings. So when you think about the technology play, still a good move for them. But all in all, very interesting time. We'll see how Robinhood plays out.
Right. Very interesting indeed. So they have done a lot of, let me not say a lot of marketing. They have benefited a lot from publicity. And you know what they say, no publicity is bad publicity. No matter what the reason for the publicity was, and the whole GameStop controversy, I think it has benefited them greatly. And they have also gotten a lot of good press too in regards to the number of new retail investors that they've been able to bring to the market. So there's good and bad, but I think overall it really has benefited the Robinhood IPO and the stock, and I think that's certainly one to watch for the future. So thank you guys. I see we have one more. Andrew said, LOL, good one. Orville says, Keisha, every time you call the name, you smile. Is that true, Keisha? I wonder why.
I'm a happy investor,
Smiling all the way to the bank.
She got her in the IPO, so she's happy.
Right.
All right. Well, thank you guys for joining me on this special live edition. It was fun having you.
No problem. Thank you for having me.
Bye.
Yeah, this was interesting. I think that we really do need to have this format a little bit more often. I don't know if I'll be able to commit to doing it live every week, but at least maybe once a month. Who knows? We will consider it because I see that you guys have been really enjoying it. And I love the numbers that we're having here on the live, 100 people joining us right now, and the interaction. You guys are able to ask your questions. Next week should be interesting because we have that episode coming up on the Jamaican digital currency. We got an exclusive interview with the CEO and founder of eCurrency, which has developed the payment platform for the digital currency. We also spoke with Deputy Governor of the Central Bank in charge of currency, Natalie Haynes. So that should be a really good episode next week. So let me tell you what else we have this week here on Kalila Reynolds Media, because we're a full media house now, right? On Money Mondays JA, which would have premiered last night, we have my 6 top productivity hacks. So how do I get stuff done? Lots of ways, lots and lots of ways that we're able to get a whole heap of stuff done in the same 24 hours that everybody else has. People always ask me, Cal, how you do so many things? Well, here's how. Tomorrow, Money Moves JA should be interesting. So last week we spoke about how to hire somebody, how do you find good talent, and what are your legal obligations to your employees once you've hired. Well, this week we're talking about how to legally fire somebody. You're fired. Not that easy in Jamaica. You can't just tell somebody you're fired. There's a whole process in order to legally fire somebody. So this is beneficial information for both employers. If you're an entrepreneur, small business owner, you need to know this. And if you're an employee, you also need to know that you have certain rights when it comes to the retrenchment process. So of course, everybody, if you're joining me for the first time, follow me on Instagram and Twitter at Kalila Ray, follow at takingstock.ja on Instagram. And if you want to connect with the analyst this week, check the description box below for their contact information. Visit our website, KalilaReynolds.com, for financial information you can use however you like it. Watch, listen, or read. Subscribe. Please subscribe to my newsletter. I have so much stuff coming in store for the newsletter. It's KalilaReynolds.com/newsletter to get the link to subscribe. And I also want you to tell a friend about Taking Stock, because what? Investing is the new sexy. So let's make it cool to talk about money. I'm Kalila Reynolds. Let's get this money. See you next time.